I always think it is important to look beyond the headlines. Anyone who knows me or has watched some of my past videos will know that I sometimes get frustrated when either headlines, articles, or podcasts leave out crucial facts or details, or sometimes ignore basic understanding of property just for a headline. In this video, I want to explore recent headlines around price inflation of residential properties around Ireland, as much as 13% in the last year. I think that's 10.6% in Dublin, and when you don't include Dublin, it's 13.6% nationwide. I think it's important to go beyond the headline and really examine what is actually happening here. Please put your comments below in terms of what you think is happening to the Irish property market and what you think might happen over the next year as well. A 13% price increase is a scary number. It also is a catchy headline, so I want to explore beyond the headline and see, is it a true reflection of the Irish property market at the moment, or is there something else that's driving this price increase? Before I start, for people who don't know me, my name is Fleming. I'm a chartered property surveyor. I have a degree in property economics. I've worked in real estate for over 17 years, and I've ran my own consultancy for the last 5 years. I generally put out YouTube videos on property just for informational purposes. Sometimes I put a little bit of effort into those videos, so if you do like my videos, please make sure you give them a thumbs up. Give this video a thumbs up as well, and if you're not subscribing already, please hit that subscribe button as well. So just a few basics first off. These headlines are based on asking prices. They're not based on actual sales prices, they're based on asking prices, and they're based on the average asking prices. Average asking prices is never a way to value property. It's a good way perhaps to look at trends, but it's never a way to value property. From any professional valuer will never use asking prices, and certainly won't use market average prices for valuing property. Each property will have to be valued individually, and I think that's an important point to remember. It's also important to remember that the size of the base that is used to calculate the average is also very important as well. I did an exercise on this before. I included it in one of my videos, perhaps maybe 9 months ago or a year ago, in regards to the importance of the size of the base that you're actually using to calculate that average. I took 100 properties that were on the market at random all over the place and put them into a spreadsheet. The prices range from about 300,000 to 2 million. Put 100 properties in and calculated what the average for those 100 properties were. I took out 25 properties of pure random and calculated a new base average on 75 properties. I took 25% away. That average was 5% off what the original base for the 100 properties was. So there was a 5% difference there, even though pretty much they were all the same properties and 25% were just taken out at random. I did the same exercise again. I took a totally different 25% out, and again this resulted in a 6% difference from the first average base on 100 properties. I bring this up and why it's important, because right now we have 31% less properties on the market than we would normally have or this time last year. Therefore, the base is 31% smaller. While it's not going to have a huge impact on the overall average, it definitely will cause a variance in terms of the average price. And I think that's important to realize when these averages are coming out. There's different properties that are on the market, and also there's a much smaller section for people to do an average price on. Therefore, that average price is going to be a little bit different because it's 31% less than what the normal base would be. Using averages for property, I don't think it's a great thing to do for a number of different reasons, and it comes up quite a lot. I don't think it really shows how far we've come in certain sectors. It comes up in the rental market as well, particularly in Dublin, where we've seen reports for the last number of years that rental prices in Dublin are actually higher than they were in 2007 on an average basis. However, that's not a fair comparison because the markets were completely different. Back in 2007, we had a huge amount of bed sits in pre-63s, which no longer exist anymore, and people used to be able to rent them for €500. If they no longer exist, that is going to have a huge impact on the average price for a rental accommodation in Dublin. Also, The issue with pre-63s and bed sits, a huge amount of them don't exist anymore because they've been regulated out of the market. And while they have disappeared out of the market, a huge amount of the rental stock that have actually come into the market are serviced apartments which have gyms, cinemas, swimming pools, concierge services, and that's what the huge amount of the property market in terms of what has been added to the rental stock has happened over the last few years. Therefore, comparing those type of properties to properties we had in 2007 where serviced apartments pretty much didn't exist is not a fair comparison in my mind. And the same can be said when we're looking at when we're looking at new properties. Because when you talk about new properties compared to what is being built now compared to 2007, in terms of average prices, again, it's not quite comparable, because in 2007, a huge amount of the properties that were being constructed in 2006 and 2007 were small apartments built by developers like Liam Carroll, and that was making up the majority of new stock coming onto the market. Right now what we have is we have much stricter building regs, we have design regs that are completely different, apartments are much bigger, there's dual aspects, there's much more requirement for stairs and fire safety. And in terms of houses that are being built, we also have houses that are being built with A1 and A2 energy ratings, something that did not exist back in 2007 either. So comparing what we're building now back to 2007 and comparing those prices in terms of averages, again, is a bit of a misnomer. Okay, so let's get on to the details within the Davies and My Home report that was published this week, which came out to say that price inflation nationwide has been 13%, 10.6% in Dublin, and when you don't include Dublin in the stats, the average price inflation is 13.6%. The headlines of 13% is quite a scary headline. It's definitely a catchy headline. However, the articles in terms of media or how it was reported don't generally focus on the fact that these prices are actually asking prices and not sold prices. So asking prices, again, not a good way to determine value. They're generally never used within the profession, but media love using them, and My Home and Davies seem to love using them as well. Granted, they're good for trends, but realistically they're not good for value. The reports also do not highlight the fact that the 13% increase is based on Q2 figures 2020 versus Q2 figures 2021. Let's just think back what was happening in Q2 2020. It was our first lockdown. Property prices or asking prices, dropped in a number of locations quite steeply and then bounced back very quickly in Q3 2020. Therefore, what we're comparing right now in terms of that 13% increase over the year, nearly 6 to 7% of that increase actually happened back in Q3 2020, because it dropped so much in Q2 2020 and then bounced back very quickly in Q3 2020, and at least 7 or 6% was associated with those few months. And realistically, what we're looking at from that period is about 5 to 6% increase. Therefore, it is not a real comparison on terms of an overall annual increase. The media don't highlight this. To be fair to the Davies and My Home report, they do highlight it within their 20-page longer document that they published. It is highlighted in that they are comparing Q2 2020, which was the start of the lockdown, and there was a reduction in prices at that point, which quickly bounced back. They also do highlight that they reckon once that is taken out and reflected in next quarter's report, the likelihood is the increase is going to be in the single digits. But again, none of that is picked up by the media or the press or anyone talking about it in commentary. They don't highlight the fact that we are talking about Q2 2020 when we are looking at these figures, which is definitely having a big impact on a double-digit inflation growth in terms of prices, in terms of asking prices. So I think it is an important factor to consider when reviewing these headlines. In the My Home report, at the very end of it,
they do discuss sold prices in the last page or two. So to be fair to them, they do mention it. They mention that sold prices from April 2020 to April 2021 have increased on average by 4.5%. Generally speaking, 4.5% would be a relatively low year in terms of increases. Some years we have definitely had double digits over the last kind of 10 and 20 years. So it's not all that much of an increase in terms of actually sold prices from April to April. And according to the CSO figures, annual increase nationwide has been 4.5% from April to April. Granted, they are based on sold prices, and again, they are averages. The CSO data is generally a few months behind, but it is at least based on actual sold and completed prices. Overall, from the CSO figures, national index is 14.3% below what it was in its peak in 2007. Dublin residential prices are 19.6% below where they were in their peak in 2007, and residential prices are nationally, when you don't include Dublin, are down 16.8%, which are below the peak levels in 2007. But more importantly is looking at this in terms of recent figures and recent averages in terms of sold prices. The figures or the sale prices that are being achieved right now are still less than they were in 2018, and that's an important thing to kind of understand, that while everyone is going crazy right now in terms of where sale prices are in terms of an average, they are still below where they were in 2018. Granted, I'm not saying things aren't crazy out there. Things are definitely crazy out there, and some areas are experiencing crazy growth. But in terms of an average, again, I don't like using them, but if we insist on using average prices to measure where the property market is going, the average price nationwide is still less than it was in 2018. And I had a look at this myself. I sold a few properties in 2018 in Sandyford and Ranelagh, and I had a quick check to see what properties similar to those were achieving on the same road and same standard right now. Some of those properties are still achieving about 5% less than what we achieved in 2018. Therefore, that kind of ties in with the CSO figures and the CSO graph. The prices still have not reached the 2018 levels. Granted, the market is crazy out there, and I'm not denying that. It's been hyped up by media, by politicians, the market being closed for a number of months, the lack of supply and increased savings is all definitely driving for price inflation at the moment. And I'm not saying it's not happening, it definitely is happening, but perhaps it's not quite as much as 13.5%. And it is important to keep in mind that when we are talking about averages, when we're talking about sold prices, the average increase from April to April, which is the most up-to-date data, is only at 4.5%, which is a relatively low increase compared to some years over the last 20 years. So if you are out there trying to buy at the moment, or perhaps you're considering selling, take proper advice and read beyond the headlines. On some positive note, actually the level of properties that are coming onto the market are in line with normal levels in terms of the volume per month coming onto the market. They're back to normal levels. However, there's still a huge gap in supply because the market was shut for a number of months and there was such a limited number of properties coming onto the market. So agents have a huge job in their hands to kind of catch up back to normal levels over the next few months. It may take anywhere between 6 to 9 months or even a year to get back up to normal levels. But it is a positive that the number of properties coming onto the market per month are now back to normal levels. If you have any general property topics or general topics you want me to discuss on this channel, please put it in the comments below. I'll see if I can make a video on the topic. I do sometimes put a little bit of effort into these videos, and if you've watched all the way through till now, please give us a thumbs up and don't forget to subscribe. And as always, I want to thank you for watching. Thanks a million, guys. See you soon.